Hello again, the US GDP numbers are in, but do they give us any more clues of when Fed liftoff might be? Well, I've been speaking to Ranko Berich from Monex. So Ranko, we've seen this US GDP number revised downwards sharply. Economists seem to be falling over themselves to say it's not that bad. What's your take on it?
I think there's probably two things to consider. Firstly, the number was not as bad as expected. So median forecasts were kind of around a 0.9% contraction. What we've had instead is a 0.7% contraction. So firstly, it was better than expected. But secondly, I think there is a very valid argument that states that actually the US economy didn't contract as much as perhaps certain analysts thought in the first quarter. And recently we've seen some data, for example, we've had housing market data actually start to look pretty positive. We've had core durable goods orders pick up. Inflation is reasonably firm. And on top of that, the Federal Reserve, which actually makes the decisions in terms of US monetary policy, does seem to think on the whole that what we saw in the poor Q1 data was a little bit of a blip or a seasonal effect, as opposed to something that markets should actually be seriously concerned about, and today's results do seem to underline that point.
Yeah, I'm always a glass half empty sort of person with these sorts of numbers. A lot's been talked about the strength of the US dollar, also low energy prices hitting that sector. Those are two factors that aren't going to go away for the US economy, are they?
Right, absolutely. So investment in, for example, the oil extraction sector is going to take a hit. There's no two ways about that. The US economy, however, is a very different beast to, for example, the Australian economy, where the slowdown in mining investment and oil and gas was a really big structural effect in the labour market. So we are seeing those effects in the labour market in the US and in the and perhaps in investment figures, but it's not as big of a deal as elsewhere because the US economy is very large and you have solid growth elsewhere. So potentially we could see areas such as housing, hopefully consumption, pick up the slack where oil and gas extraction has sort of dropped off. And on top of that, there's the fact that yes, you do have reduced revenues in terms of oil and gas producers, but then at the same time, the cheaper energy prices act really as like a bit of a tax cut for the economy as a whole.
What do you think Janet Yellen makes of these numbers? Her recent comments seem to show that she's actually looking for a rate rise this year. Do you think these numbers will change her point of view?
No, not at all. I imagine, if the Fed has a checklist, this is another big tick in the box that's marked, Q1. So it shows really that the Fed was justified in not panicking too much when they first saw US data head south, kind of in the first couple of months of the year.
Yeah. So do you think we're on for a rate hike this year?
Absolutely, yeah.
Yeah, sure. And what about the US dollar? Is it going to be a strengthening story again? It did fall off quite sharply, but it has been rising recently in terms of dollar index anyway.
Yeah, right. So we did see quite a spectacular sort of trend of dollar strength from the middle of last year all the way really to January and a little bit further than that this year. And then we saw what I would describe as perhaps a bit of a correction. So looking ahead, on the whole, I am still very bullish on the US dollar, but we could be looking at a period of sideways trading or volatility as the rest of the Q1 data sort of filters out. We've got the situation in Greece, all those sorts of things.
Yes, so let's broaden out to Greece. I know you've been writing about Eurozone and Greece. You think you're quite positive on the situation that we could be heading towards a deal?
Yeah, so on the whole, for me, looking at the situation, I think the basis for a deal between Greece and its creditors is too fundamentally sound for talks to break down. I think it'd be a real tragedy if, given the fact that there's a really solid basis for a deal, that one wasn't struck. And that basis, as we've sort of discussed before, is basically Greece reforms its economy, and that will involve potentially some actions that will be very hard to sell to the Greek electorate, but in exchange for that, Greece gets looser fiscal surplus targets and potentially even debt relief. So we're slowly starting to see the lights switch on, that is the right solution, and so I can't help but think that is what will happen.
Yeah, what does that mean? We'll finish with the euro dollar. What does that mean for the euro dollar rate? Because that's quite interesting then, because we have two positive scenarios, that we see a strengthening US economy and potentially a solution in terms of the eurozone. So what's that going to mean for the euro dollar rate?
I think that's actually a really good question, because I think to look look at what's actually happening in Eurodollar, I think at first we'll see a little bit of a relief rally when a deal is struck. Just how far that'll extend will depend on a number of things, but I certainly think if that risk of a messy Greek exit or Greek bond default is removed, we'll see the euro strengthen. However, I still think in the medium term, the economic fundamentals indicate that inflation is a lot stronger in the US, the labour market's a lot stronger in the US, and as such, monetary policy will be tightened in the United States a lot earlier than in Europe. And I mean, if you need that point underlined, we've got the ECB press conference next week, and I think Draghi has been particularly clear about the fact that even if the ECB sees a little bit of an improvement in economic conditions, they're going to stick with their quantitative easing program.
Well, thanks to Ranko for his insight. Stay tuned for more of the same, but for now, goodbye.